Silver has reached a stunning high of $64, capturing the attention of traders worldwide. Markets are buzzing as prices spike, reflecting sudden demand and intense speculation. Investors are watching closely as this could signal a new phase in precious metals trading. On the trading floors, excitement is palpable. Screens flash the rapid rise of silver prices. While analysts debate whether this surge is temporary or the start of a historic rally, the market is alive with anticipation and energy. Behind the scenes, COMEX silver vaults are losing inventory at an extraordinary rate. Millions of ounces are disappearing in just days, far faster than usual, creating a tense atmosphere among market watchers. The pace of depletion is like a fire hose draining a pool. Physical silver is vanishing so quickly that short sellers may soon struggle to meet delivery requirements, hinting at a potential supply squeeze. This rapid withdrawal of silver sets the stage for a delivery squeeze. When short sellers must deliver actual metal, the shrinking inventory could trigger intense market pressure and volatile price movements. Imagine a balance tipping rapidly, silver bars on one side vanishing into thin air. The market tension grows as physical metal becomes scarce, signaling potential opportunities and risks for investors alike. Major institutional players are entering the market, adding layers of complexity. Large purchases by trusts and funds indicate serious interest in silver beyond retail speculation, strengthening the bullish outlook. In vaults across the world, silver is being secured by professionals with massive capital. Their activity signals that something bigger is happening. This isn't just a retail-driven rally anymore. Even Wall Street giants are taking notice. JP Morgan has flipped from net short to net long on silver futures for the first time since 2018, a move that could influence market dynamics significantly. A symbolic silver bull rises on the trading floor as large institutions align with market momentum. The shift in positions hints at growing confidence in higher silver prices in the near term. Traders track for critical indicators: COMEX inventory, lease rates, backwardation, and Shanghai premiums. Each offers clues about market tightness and potential price moves, helping investors anticipate trends. On a trader's desk, glowing indicators hover, signaling supply, demand, and stress in the market. Monitoring these metrics is key to understanding where silver might move next. The spread between spot and 3-month futures highlights market urgency. When spot prices exceed futures, it signals immediate demand outpacing expectations, a classic early warning of potential rallies. Silver contracts hover above glowing bars, showing backwardation. Investors interpret this as a sign that the market is tightening, creating potential opportunities for swift price gains. Shanghai silver premiums have surged relative to London, indicating real physical shortages in Asia. Manufacturers compete fiercely for immediate supply, signaling global stress in silver markets. Silver flows across the globe, bridging Shanghai and London. Rising premiums reflect growing demand and limited availability, reinforcing signals from COMEX and futures markets. In a parabolic squeeze scenario, silver could soar to $85-$95 as inventory tightens further. Major industrial buyers locking in supply would push the market into unprecedented territory. Investors cheer as silver prices rocket skyward. Historical parallels, like palladium in 2020, suggest that supply squeezes can create dramatic short-term gains, though volatility remains high. A measured rally could see silver climb gradually to $70-$75. With consolidation between $65 and $80, this path suggests steady growth, influenced by ETF inflows and ongoing demand. Analysts monitor trading carefully as prices rise steadily. This scenario offers potential profits with lower risk, as market movements are tempered by moderate inventory and demand signals. A correction could pull silver back to $50 to $58, creating a new trading range. Factors like weakening industrial demand or Fed policy shifts could trigger this reset. Silver coins spill from vaults as the market adjusts. Traders anticipate a reset, with volatility and price swings reflecting the uncertainty of supply and global demand trends. Industrial demand for silver is at record highs. Solar panels, electric vehicles, and AI infrastructure consume massive amounts, making silver indispensable and less substitutable. Across cities and data centers, silver circuits and panels glow. The industrial boom is driving real demand, reinforcing the market's tightness and long-term bullish case. Bank of America sets a $65 12-month silver target, citing ETF inflows, persistent deficits, and narrow real yields. Analysts view this as validation of the bullish fundamentals. Floating silver coins reflect global market dynamics. Reports and projections hint at future price movements, blending institutional insight with real supply-demand trends. Federal Reserve cuts reduce the opportunity cost of holding silver with negative real yields. Silver historically performs best, creating a supportive macro environment for prices. Treasury bonds float above shining silver bars, symbolizing real yield pressures. Lower rates encourage investors to allocate more to precious metals, strengthening demand. The horizon for silver is uncertain yet full of potential. Traders watch for inventory changes and indicator signals that could trigger historic rallies or market resets. As a vault door opens to glowing light, market suspense builds. Investors prepare for what could be a transformative period in silver trading, blending anticipation with opportunity.